So the stock market is crashing, the world is ending, everyone's investments down 10-20%. There's definitely a lot of fear and blood in the water right now. But at the same time, this kind of volatile market condition is perfect for us day traders to profit. So I'm sure everyone's aware of by now this pandemic that's been happening since early February that's causing a lot of fear in the general public. Everyone's making these crazy grocery runs to stock up on their non-perishable foods. And there's a massive shortage of sanitizers, medical masks, and for the first time ever, toilet papers are worth more than a Lamborghini. Okay, maybe just a Lamborghini hat. All of this unprecedented spread of fear is causing stock market investors to panic sell their positions. As you can see, some of the biggest sectors that got hit are the travel stocks, such as the airlines and the cruise lines. Just as everyone's thinking these cruise line stocks can't go any lower, they tank even further down. No pun intended. But it's exactly at times like these, when 90% of the world is panic selling, that it presents the best opportunities to profit for us short-term traders. So that's what we'll be talking about today in this video. My thoughts on how to take advantage of the current volatility in the market, both as a buyer and a short seller. That's right, you don't have to short all the time in order to profit from this market condition. As long as you remember to drop a like on the video, it's completely free and safe to do, and you can do so while chilling in the comforts of your own home, all the while maintaining social distancing. The only infection you might be exposed to catching is some very bad jokes. So let's talk about how to profit as a short-term day trader in this volatile market. Day trading means you're buying and selling a position within the same day. No, you're not holding for weeks, months, or years. That's long-term investing. We'll talk more about that later on. As a day trader, the kind of volatility we're seeing in the stock market right now is perfect for day traders because it provides us a lot of range both to the upside and the downside. While my focuses in the last few weeks has been the travel sector, these are stocks that have been very beaten down and selling off to 52-week lows because of all the travel restrictions that's being implemented by various world governments. Specifically, the cruise line stocks such as Royal Caribbean, Norwegian Cruise, and Carnival Corporation. They are suspending a lot of their cruise line operations because of all the travel bans. So in the big picture, these companies are likely going to miss earnings within the next few quarters. Because of course, these companies will not have any revenue coming in, and analysts are cutting their guidance, and the bottom is most likely not set in stone yet for these stocks. So if I was an investor holding these stocks as a long-term investment, I might start getting kind of worried on whether these cruise line stocks have enough cash to stay afloat and not go bankrupt during the next few difficult months. But as a short-term day trader, there's actually tons of opportunities for long setups for us to buy. And many of these cruise line and airline stocks are on watch on my free weekend watch list. These stocks have been on SSR consecutively for multiple days during the last few weeks of market sell-off. And that's my tip number 1 for day trading in this kind of volatile market. Watch out for SSR triggered stocks and volume and trend reversal to come in. SSR stands for short sell restriction. That means a short seller can only hit the stock on the ask. They cannot short on the bid. And SSR is triggered when any stock falls 10% below the previous day close price. So why does that matter if you're looking for long setups? Well, it matters a lot if there's buying volume starting to come in. On beaten down stocks that's been downtrending on the daily, such as RCL, CCL, and many other airline stocks, there's tons of short sellers piled in, and many of them swinging the stock short. And since short sellers can only short on the uptick instead of shorting the bid on the breakdown, that means if volume starts to come in and stock start to reverse without any pullback, the short sellers have to buy to cover, which in turn adds to the buying volume and allow really beaten down stocks to really squeeze when there's volume coming in. But it's important to understand though that SSR, just like short float percentage, they do not directly naturally lead to a short squeeze. I'm just saying they can contribute to it. Which leads us to tip number 2. Do not be too long or short biased during intraday trading. Just because we're overall downtrending on the market, does that mean that every single pop intraday is a short? Especially when a lot of these stocks are triggered with SSR and have a high short interest, like we talked about earlier. But keep in mind, I'm talking about day trading at the moment, not swing trading and definitely not long-term investing. As day traders, we profit from these stock market volatility. So it's extremely important to stay on the right side of the intraday trend, as you can see from these charts here. When these beaten down stocks really bounce, they can squeeze up for dollars. But once they start topping out at higher resistance levels, a lot of times they start selling off, retracing 50% of the gains and a lot of times selling off the entire gap. Whether you like to play the long trend to the upside or short to the downside, there's a lot of range for both sides of the trade. And in my opinion, one of the most important qualities to have as a day trader in this volatile market is to have the ability to flip your bias long or short by understanding the psychology behind all the traders and players in the market and identifying who is in pain, which fortunately is something I'm good at. It's okay to be wrong in day trading, but don't stay wrong. Cut your losers when the trend is reversing and either flip the other side or be patient and wait for your entry later on. And only re-attack when the stock is starting to top out at higher resistance levels or starting to consolidate at lower level support. Because there's no reason to be bag holding anything right now in this market. Now, the next important tip I have for you is to smash the like button and subscribe to this channel. With all the self-isolation and social distancing that's going on right now in Canada, US, and the rest of the world, neither you or I are going anywhere anytime soon. So you may as well just stay for the bad jokes. The Canadian government has finally officially warned us to stay indoors, cancel all essential travel, do not go out to bars and restaurants, and basically just don't see any other human beings. So in other words, my life really hasn't changed all that much. In all seriousness, the next tip is extremely important in this kind of bipolar market. Get your hands on instant news resources because we are in a headline-driven market. Yes, there are definitely free resources such as Finviz, Yahoo Finance, and Stock Market Watch, but they are not the fastest feed. I mean, they're free after all, right? I personally use Briefing for email and text updates on large cap stocks, and Benzinga Pro for the small cap and large cap audio alerts, as well as the news headline postings on their platform. Knowing the name drops and the company tickers from President Trump's speech and the intraday updates from companies cutting their guidance and halting operations is extremely important. And it's with instant news resources like this that give us traders the speed and the early entry in this kind of headline-driven market. Now, tip number 4. This is going to sound like a no-brainer, but you'll be surprised how many beginner traders don't bother with this. That is to prepare a detailed trading plan on all the stocks that you're watching to trade. And no, just a list of 10 tickers and a headline is not enough. Your trading plan should include at least your bias long or short, all the important price levels over and under, your entries, potential exits, and stop losses if you're wrong. Yes, that's right. As much as we don't want to, part of a trading plan is planning for your loss. Because it's only if you have a planned level that you want to risk off that you can keep your losses in control. Again, planning for your trades is 90% of the work in day trading. And once that's done, pre-market, I just spend the rest of the 10% of the work after the market opens executing my plans. Of course, there are other detailed nuances such as reading SEC filings and news headline analysis, and I talk about them in detail in my watchlist videos. Yes, I do spend about 1.5 to 2 hours each morning before the market opens planning for my trades. You can now sign up to receive my daily pre-market trading plan sent directly to your email. Alternatively, you can also trade with me daily in my Discord chat and access more exclusive trading video lessons and webinars. Feel free to check them out in the links below. And if you're not ready, no worries at all. You can still receive my free weekend watch list sent out every single Sunday, in which I provide a list of 3 to 4 stocks I'm watching for more follow-through next week. And usually these plays can last a few days and can provide great ranges to the upside and downside for both the day traders and swing traders. Now, tip number 5 for trading in this market sell-off is to keep your trading and investing accounts completely separate. It's too often that I get comments from people saying that, oh, I shouldn't be buying any stocks or trading any stocks in this kind of volatile market because the bottom isn't set in yet. But that's exactly why we are day trading. We're not holding these positions long term for weeks, months, or even years. Volatility up and down is what we want for day traders. If everything just steadily grind up, then it's choppy, then there's no range for us to play. Like I mentioned many times before, day trading is a business activity. It's very different from long-term investing where you're just buying and holding the stocks forever for 10, 20 years. Which is why it's important to keep your account separate. Yes, for tax efficiency purposes, but also for your emotional sanity. When I'm day trading, I don't want to see my long-term investments in the corner of my eyes and then make short-term emotional buying and selling decisions on positions that are meant to be held for 5, 10, 20 years. And by the way, I don't check my long-term investments every single day. I check it maybe once a month, but I'm sure it's down in the drain somewhere. I'm down probably 10, 20% on the year. But in the meantime, I'm definitely keeping an eye out for some quality stocks that's trading at a huge discount. And the plan is to buy and hold these stocks for the long term until I turn 50 in about 5 years. We talk mostly about short-term day trading strategies and setups on this channel, but there's definitely a lot of opportunities coming up in the next few months for the long-term investors to buy. There's a very good saying that goes something like, fortunes are made in a recession. I'm sure somebody said it because it wasn't me. But if you're interested in some long-term investing ideas and videos, feel free to let me know below. And if you want to sign up for my free weekend watch list or trade with me in my Discord room, there's links to those below as well. As always, make sure to stay positive and stay healthy. We'll all be okay. Thank you guys for watching as always. I'm the Humble Trader, and I'll see you guys next week.